2 years ago, I packed my car, old Chevette, 84. Drove it till the engine smoked, hitched a ride through San Antone. Got a job, tending bar, let a senorita break my heart. I wanna sink my feet into some Illinois clay, walk along the cornfield in the cool of the day, get a dog.
All right, welcome everyone. Another edition of the CommonGround podcast, and thanks for joining us as always. We're really excited about today's guest. We've got Kevin Brooks with the University of Illinois, and we're gonna hit a lot of different topics. So without further ado, let's get started. And maybe best case here is Kevin. Why don't you introduce yourself and give a little bit of background?
Yeah, so like I said, my name's Kevin Brooks. I'm an extension educator with University of Illinois Extension. My particular area is farm business management and marketing and everything that goes through that, which ranges from owners and cash lease information to looking at expenses and income on the farm side for the farmer side. And I'm also a licensed real estate managing broker in Illinois.
Excellent. So how long have you been with the University of Illinois?
Well, with my current position for about a year. I was with the university for 12 years prior to that, and have been in education for quite a while and also industry. But with the state budget cuts back in 2011, the university extension service pretty much got out of field staff education, which is education out in the field, due to the state budget cuts from the Great Recession. And they started hiring back, and we've hired quite a few positions.
Excellent. So, yeah, well, let's kick things off. First thing I want to talk about is this landowner conference that was just held here recently. It was Illinois Central College, like November 20th, I believe the date was.
It was November 20th. It was hosted by Illinois Central College. I worked with Pete Fondel there, who's on staff. He used to be with Extension, so I worked with him prior during my first go around with Extension. But it was a University of Illinois Extension program, and the purpose in doing it was basically to provide education for landowners on how to properly manage their farm, as well as the secondary audience would be farm operations, where you have maybe a son or a daughter that has been working in the operation in a small capacity, but someday they're going to be taking over the farm. And it was basically a workshop to also help them get up to speed with various aspects of managing a farm.
Okay. And it's my understanding the event sold out, right?
Yeah, we had to cut registration off early just because of the numbers of people that were interested. And we actually drew in the Illinois owners, but owners living in Florida, Washington, D.C., Minnesota, Wisconsin, Iowa, and a couple of other states.
No, Kevin, and I got to spend a little bit of time there. I had to slide out early, but I was there that day. I mean, it was impressive group, good speakers, just very, very well done. I would recommend it to anybody.
Was that the first year? Was that the first year it was done?
That was the first year in Extension that we have done something like that. I did do one back in 2015 working as a farm manager. Okay. So I had some experience with it. We brought in outside speakers to, I guess, fill in some of the gaps, but also, my area being farm management, I'm the only educator right now in Extension that handles that particular area. So we had some really good professional speakers. They were chosen by their ability to speak and also get to the point. We limited how long they could speak just so they got to the point. And drawing that many people, we wanted to make sure that they had a full day, and we covered a variety of topics that would be interesting to them. If you're looking at 24 speakers, which we had, there are going to be a few topics there that some landowners aren't going to be as interested in. So we brought in a lot, and the main emphasis was to get to the point. What do you really need to know here? But also where owners can ask the right questions and know where to go for information, whether it's hiring a farm manager and having a discussion with that, doing it themselves, how to analyze a soil test, how some cash lease questions. It was just pretty wide ranging of topics that I know as a farm manager as well as an educator that landowners have and come up, but maybe you don't really think about it until it does come up. As you might remember, we brought in a surveyor to talk about surveys, and what really precipitated that is that in between my extension appointments, a landowner that I've been working with for quite some time was in a property boundary dispute with another area owner. And the amount of money that's been spent on litigation over that has been pretty significant. And the concept behind that is that what do you really need to know about surveys and how can you avoid problems in the future?
Sure.
There's a small taste. Like I said, we had 24 speakers.
So how many guests were in attendance at the event? Roughly.
It was about 200 all told with the speakers and vendors and stuff. We were well over 220.
So with that kind of success, I'm assuming this is going to be an annual thing ongoing?
Not exactly sure how often we'll do it or when we'll do it. It's a lot of work to be, but it was our inaugural meeting for bringing agriculture back into extension on the farm management side. And we wanted to do something that would get a lot of attention, let people know that we're there, and also begin the conversation to where if people have questions, they can call me or know where they might go or who they might talk to get help. Not necessarily directly from the speakers, but just to begin that conversation.
Nice. So with that being said, what do you know or how familiar with CommonGround are you?
What I've read on the internet, and that's about as far as it goes.
Well, you know what they say, you can't believe anything you read on the internet. So, yeah, so CommonGround, it was formerly cashrent.com. I don't know if you've ever heard of cashrent.com, but we rebranded at the beginning, January 23 this year. But CommonGround is basically an open, transparent marketplace to allow landowners to go on. And we've got first off, we've got a pretty unique price discovery tool, which basically allows the landowner to go in and select their farm, select their tillable acreages, and then it basically pulls in a data set and analyzes it and gives them a price discovery tool to give them a range of what they should be getting in cash rent. Because obviously, you're drawing all these people coming in for a land conference. They have questions about what's the value of my ground, and just kind of the background where that got started was, I purchased my first farm, and with a background in real estate, and this was back in 2013, and I found it very fragmented as far as the data was, as far as, okay, yeah, you can go look and see what the USDA says your county average is, but there's a lot of differentiating factors. So I did soil tests, I GPSed my farm, and then I started asking questions, and I found, talking with different growers, saying, oh, I'd pay, 180, I'd pay 200, I'd pay 240. And I saw this range. So that's kind of how this whole idea was born, rather than me having to go through all of this extensive research and soil tests and do all these sorts of things is, hey, can we create a quick, easy, price discovery tool for landowners to say, in this area with these soils, here's a good range of real-time data. So once we give the landowner that price discovery tool, they have the option of, putting it up on the software, and then we market that to all the area farmers and allow them to bid on it. So it's kind of it goes from price discovery to an open, transparent, competitive marketplace where we can actually find price equilibrium to say, hey, we had 12 farmers with a combination of 60 bids. Here's all of them. Here's the results. Let's start working through it. And I think what's kind of unique is we allow the landowner to make the choice on the tenant farmer. High bid doesn't win, and we still give the power to the landowner to sift through and select their winning tenant farmer based off of whatever criteria they see fit. So that's kind of, it in a nutshell. But, since then we've gotten into, increasing landowner ROI through hunting leases. A lot of the absentee landowners are leasing out their tillable ground, and okay, if we can do that through the software, can we also lease out our timber that, we never use, maybe get a few ticks on the ROI? So we do that as well. But yeah, that's just a brief history, probably similar to what you read on the internet. But what are your thoughts and questions on kind of what we're doing, and how does that intertwine with, quasi farm management?
Kevin, if you've never seen it, would you, I can do a screen share here. I could show you a cash rent estimate if you would have any interest in seeing it. It takes just a couple seconds, really. It will spit out a range.
That would be good. I am familiar with the model. There are other, not a lot, but there are other companies operating or have operated in a similar fashion. So it's something that I'm familiar with. What is particularly interesting to me is farmers and landowners, both society in general, is getting hit with information overload, and managing that information is important. And I see this as a potential tool to help manage that. Myself, I know how to sit down and analyze a farm and come up with a cash rent scenario. And if I put an ad in the Agri News or something like that, I'd probably get between 50 and 100 serious calls on it, and then having to sort through that. But this type of system, I think, can help landowners to sort through that, as well as it gives some information to the farmers as well, so they can make an educated bid, or I guess I would prefer to call them proposal on the land, because it's not just about the highest bid. It's about who is the best fit for that operation in the eyes of the landowner, who is ultimately the person who makes the decision and is ultimately in control of who farms their ground.
Kevin, do you have a spot? Do you have a specific area you'd maybe like to test one in, see one, a farm maybe you're even familiar with?
Yeah, I'm trying to think of which one to go here, but you can just pick one. That would be
okay. Yeah. So let's just go like over here by Fisher or the Champaign. So here, let's say we're going to pick this parcel.
Yeah, you're going to run into a mid to high class B farm probably in that area.
Right in here. Okay. Okay. So let's do that. So we picked, let's say both of these are owned by the same landowner. Okay. So I'll simply go next. This will now, you can see these, and you're familiar, common land unit. So we have CLUs baked into the system. This is a tillable non-irrigated tract. We're going to save that piece. Same on this one. Same on this one, same on this one, and we'll see here, like this is possibly actually farmed. See this here, say that's farmed. You get the idea here anyway. So we can break this down kind of as closer. You can draw if the CLUs don't spay out. But so say we did that quickly. In this case, I'm just interested in this. So we're going to go next here. And what this is going to do then, this is going to spit out a report specific to that tract. That tract consists of 161.4 acres, 152 of that is tillable. We've got an expected range between 303 to 370, 336 would kind of be somewhere in the middle. Some statistics on expected yields. We've got a 120, which you're spot on, called 122 PI on that tract. Elliott, Celty, clay loam primarily makes up that field. So, this is a report that the landowner could use as a resource. We've intentionally stayed very conservative, I would say, on our valuations. And in most cases, we see high bids well above our high estimated range. Part of that is probably due to, the competitive bidding nature, but we've been able to attract very, very high quality tenants and connect them with landowners that have been very happy with the results. In a lot of cases, we're seeing average increase across the board of just shy of 40% landowner ROI and happy farmers to boot. So it's
Kevin, what did you think of that range as far as, price?
I think you guys pretty much nailed it. The range in there for probably not recently negotiated leases or a lease where a landowner is doing this on their own without a lot of experience. But I would say the majority of rents in that area are within that range. But could it be higher? Yeah, for sure. There would be producers probably willing to bid higher than that. There's a lot that goes into that equation. Of course, what that leaves off would be the flexible cash lease, but for a base, I would fully expect it to be pretty spot on, that particular farm that you brought up.
Nice.
Well,
I happen to know that area pretty well, so I have a good idea.
And Kevin, if it's something going forward, you can create a free account on CommonGround.io and just go to do the free cash rent estimate, and it's actually really fun to just kind of compare county by county, and we've got it broke down to each county level. So that 122 or 121.8 PI there in that specific county that we were just in could have a different value than a 121.8 PI in Fulton County, Illinois, or Adams County, or it's all broke down to the county level, all of our data, pretty much for all of the Midwestern states.
The other thing that we find valuable with what we're doing that's kind of unique is with each property that has gone through the platform, those bid results are backfed into the equation. So the cash rent estimate is always evolving because, a cash lease auction done last year is going to be different than this year, obviously based off of inputs, commodity prices, et cetera, et cetera. So we're actually feeding in real-time data to say this piece in this area with these results has been, getting these results, and that kind of shifts the needle where it needs to be for more real-time cash rental rates. So,
so the rental rates that you're putting up there are from your database through information that you've received, because a lot of landowners want to go to the USDA averages.
Yep.
And
that's what I did. That's what I did prior to this. And I'd love to hear your thoughts on the USDA county averages.
They're really low.
Okay. And that's what I found is not, and I've talked to Brad about this for years and other people is, they're sending out surveys to growers and they're self-reporting, and it's almost, like, hey, we can put down whatever we want. And it kind of suppresses the actual true rental rate that's out there. And it's not only kind of false information, it's stale data. Would you agree with that?
Well, the information they're getting back, it tends to be low numbers of responses, first of all.
Yep.
Also, I've been around agricultural enough to know that probably most of them that are paying a low rent for the ground is probably not going to want to disclose that, as well as those who are paying higher are probably not going to be motivated to disclose that. So at best, they're averages. And then you would have to know, well, what is the average productivity for that county, and then compare that back. So this more or less takes that out of it. It's something that I work with farmers a lot, or landowners and farmers, in doing the calculations themselves. But this at a glance seems like it would take a lot of that guesswork.
Yeah. And we purposely provide that range because there's certain variables that, the landowner might not know about. It's stuff we might not know about. Is it pattern tiled? Obviously that's going to drive a higher rent, or looking at field edges and whatnot. Like, we can't take every variable in, and that's why we provide a range on a conservative level to just say, hey, here's a good starting point. But what's going to drive the real numbers and the 40% average increase is running it through the platform in a competitive open marketplace.
Yes, in real estate, in leasing, farmland leasing, in the eyes of the state, it is supply and demand in a competitive marketplace, and this moves into that. In the past, a lot of landowners, have seen, not being generationally very far removed from the farm, see it as a way of life, and they're thinking back literally to the 1970s. 1960s, maybe 1980s. Of course, 80s was the challenge for a lot of different reasons and stuff in that. But what we've seen is that agriculture has become a lot more sophisticated. It's a lot more technical. It's a lot more high stakes in terms of the amount of cash flow that's generated, the amount of yield that's being produced. Taking that times the increased market prices, we're all maybe a little disappointed that grain prices are higher than they are now, but you go back not that many years ago, they're still significantly higher than what they were. So this does help to alleviate that. Again, these are things that somebody could potentially work through themselves, but with so much information out there, where do I start? How much time do I have to do this? This at least at a glance would seem to make this quite more simple. And like I said, I'm aware of these types of systems.
Sure.
Sometimes the marketplace, in terms of the farmers, some farmers don't like it, others like it quite a bit, and it's always yeah.
That was going to be one of the points I wanted to bring up. Is for the most part, we've got very positive feedback from the farming community, because they're getting opportunities to grow their operation that they otherwise never would have known about. And 15, 20 years ago, farming was more hyper localized, and you might farm a 15-mile radius, where now farmers are farming 60-mile radiuses or more. And so the response has been overwhelmingly positive, but obviously there are farmers and growers out there that say, hey, you're driving up the rental price. And we explain that we're not driving up the rental price. It's just being put on an open, transparent marketplace, and the farmers are, being honest with what they're willing to spend, and they're getting aggressive. So it's not really us. But one of the topics that I wanted to bring up to you was what we like to refer to as forced appreciation. And, we always look at, okay, the USDA, their county averages are low. These farmers that want to keep rental rates low, what does that do in actually suppressing the actual land value from a cap rate? And just for an example, if you've got a $500,000, 100-acre tract, and it's renting out for $200, and they run it through our platform, and now it's renting out for $350, is that ground inherently worth more than $500,000 on a cap rate basis, just like rental property?
Well, you raise a good and interesting point, and right now the marketplace is trying to figure out the higher valued farmland. Because if you take $20,000 an acre ground, and I have actually seen some land in that vicinity at about that PI, maybe even slightly lower, sell for both sides of $20,000 under a competitive bid process. That is on the high side for what the market's currently doing, but I have seen that in that area. And if you just take a $20,000, whether it's that farm or a prime farm, and you took 2.5% of that as a rate of return, you're looking at $500 right there. And we are not seeing that very often in the marketplace on straight cash leases. With flex leases, we're seeing rents get up to that or even higher on a flex lease. But it does hold it down. in Illinois right now, though, it's my opinion, and I think I can back this up. A lot of the land is being purchased by farmers themselves, as opposed to investors, or it's a farmer with an investor. But I personally have not seen large amounts of investors. You know, we hear people getting upset about Chinese interests or out of state interests, billionaire interests and stuff, but primarily most grounds being purchased by farmers. There's a lot that goes into that. Like Iowa, for instance, farm ground tends to sell slightly higher in Iowa than it does in Illinois for the same productivity level. But it really gets right down to it. What's driving a lot of that difference in prices is that our taxes in Illinois, our property taxes, are about twice as high. And if you did the calculations, the difference in the value between Iowa and Illinois is about the value of the property taxes, which in a roundabout way that sort of implies what you had just said, that it does potentially hold that down.
And we had a discussion the other day of Iowa specifically, and you've got rising land values and rising commodity prices. Well, Iowa just went through and reassessed all the ground, and it went up 30%, and all these landowners were hit with a 30% increase in their taxes. So why do you think rental rates aren't following? Because the landowners in Iowa are now 30% worse off if they're not getting their rental rate adjusted. And do you think it is the lack of information for a landowner, or are they worried to go have that conversation with their farmer, or why are rental rates always lagging? I don't know.
My opinion on it, or interpretation on it, is that my answer would be yes. I think you hit on several big issues with it. One is the lack of information on the landowner's side. A lot of times you have landowners that own, maybe they're not farming, but they're landowners and they own a significant amount of land, and they're looking at their returns on rents, and they're prorating things out over a number of acres. That's a part of it. You keyed in on something, though, that is important. It's the lack of communication and lack of understanding. On the communication side, a lot of landowners are, in my opinion, afraid to have those frank conversations, or they're not motivated because things are working well. However, I do get.
Could I ask, in your opinion, like my thought on maybe the hesitancy of a lot of landowners, when even if they hear from a couple different sources, like, hey man, it seems like your rent is low. Okay. Like I would encourage you to have a discussion with your farmer. Maybe you should shop around. To me, anyway, the hard part for landowners historically to be able to do that is they don't have a tool set of knowledge that they can even go have an educated discussion with the farmer, right? And so all I know is that I feel like from different people have told me my $180 an acre is low. I go and I talk to the farmer about it, and the farmer says, well, you've got pretty substantial deer damage every year. Commodities are low. Inputs are high. That's why I can only pay you this. And the landowner goes, okay, like, you know everything about this. I know nothing about this. $180 sounds good. Okay. Like, is that why? I want to give landowners some tools, at least some knowledge, to be able to say, hey, listen, I understand your point, but here's my point. As a landowner, my expenses of holding this ground become more and more expensive every year. And so there's a multitude of reasons why I need to make sure I'm getting the most ROI out of my asset that is not your asset as the farmer's, mine as the landowner. And so, but to me, for so many folks, they wouldn't even know where to start a conversation with their farmer about adjusting rental rates.
And I agree with everything you just said. It's a big pot with a lot of different factors. And what you just described is a big part of it. It's the lack of information. Extension has been out of being a farm advisor for landowners and farmers for on the farm management side for 11 and a half years, they were out of the business.
Yeah.
There's just a lot that goes into that, but I think some of it comes back with comfort level. I mean, things are again working. I'm making enough to get by. That conversation is just so important, and it's not a lot different than even farm families. I think only about 20% of farmers in the Midwest actually have a functioning farm succession transition plan in place, an estate plan upon their demise or retirement. And even if they put them in place, it's not well communicated with their family. So it in a large part is a communication problem. And in order to have that conversation, you need to have information. And again, something like this can help an owner or even a farmer understand what the marketplace is doing.
And that is the purpose of a farm manager. And that's why landowners hire farm managers, because it's saying, hey, we don't understand this business. We have this asset. It's your job. We're paying you to manage the farm and make sure we're getting the most that we should be, a fair shake, correct? And
yes. And what I oftentimes tell landowners is, if you need a farm manager, hire one. There are good farm managers out there. We'll discuss farm managers here in a little bit. But the other aspect of it is that how do you know if your farm manager is doing a good job? You still need to know this information so that you can monitor what's going on the farm. Like I said, most farm managers are ethical and they're out there doing a good job. But you can also take a look at, I'm aware of two banks that do a lot of farm management. One of them, they ultimately give the decision of who they're going to hire to the landowner, but they also put forth, or they're for sure asking their customers on the lending side to put an application in.
Yes.
Now, does that mean that it's going to be a bad decision? No, it doesn't mean that. But it's just like anything in life, if you're selling a house, you have to know the market value.
Yes. And we see, we had farm managers hit us and like, oh my gosh, you're a digital farm management company. And it's like, no, we're not. We do not want to be in the farm management business. That's not who we are. That's not what we do. We want to work in conjunction with farm managers, and you might have a landowner that has 500 or 600 acres and they're running cash estimates, and they say, hey, how does the software work, or how does the system work? And it's still a lot for them to handle based off of how many acres they own. And we might say, hey, you're a prime candidate to have a farm manager, and we want to work in conjunction and be a tool for farm managers. And to your point, we told farm managers when they said, oh, you're trying to get into our sandbox and play, and it's like, as a farm manager, why wouldn't you utilize us as a tool to show your landowner that, hey, I put your property on an open, transparent marketplace, and they marketed it, and we had 12 farmers, here were all the bids, and take them and show them the information to say, we got the best possible numbers. You still get to decide, where maybe that financial institution just picked 3 of its bigger operators that are borrowing money from them and keep it in a closed loop. So I think from a farm management standpoint, you'd want to utilize this as a tool to go back to your landowner and say, hey, we got the best we could. You pick.
As a farm manager, your client is the landowner, right? I mean, that's who you are ultimately working for as the farm manager, is the landowner.
Yeah.
Not the farmers, not the side deals for this, that, or the other. It's, to me, should be specifically the landowners who you're representing. And it might not, maybe the better farmer or the best farmer out of the options is a guy that's outside of the comfort zone of that specific farm manager's network. But I don't believe that the landowner should have to burden a lesser rent or be objected to, maybe not the opportunity to have that good tenant on their farm, just because that operator doesn't fall into that network of click for that specific farm manager. Is that fair to say, Kevin? Like,
I think it's fair. I have several thoughts on it. First, I also want to mention that I am aware of a fairly large farm management company owned by a bank, and they absolutely do not want the lines blurred between commercial lending and farm management. It's just something that landowners need to be aware of. When it comes to banks as farm managers, what a lot of people don't realize is that banks operate on relatively pretty thin margins. Mm-hmm. And there are two things that drive the two things that drive banks, my opinion. One of them is don't spend money. In other words, keep your expenses low and don't spend money on things that are going to drive up expenses. Obviously, you're providing a service, which there could be a fee on. So that could be one thing that may be a block as you're going forward. The other thing is that they don't want to get sued, again, because they're on such low margins. Those really drive a lot of banks. But yeah, I do think this is a good method to get information, and it's a little bit like this. As I've managed in my life farm assets probably worth $750 million. And that's a lot of ground. Mm-hmm. And a lot of farm managers, not a lot, I'll back off of that. Some farm managers talk about drive-by appraisals. And with some companies, that means you kind of drive by and there it is, and you go drive by once a year and that's it. Other farm managers are out on your farm at least every month, or if there's a big event, a weather event, they're out there looking around. So they do come from different perspectives, and some of it again is driven by not spending money. But where I'm going with this is that if you're managing, for some farm managers, 7,000 acres to manage is a lot of ground, depending on the farmers you have, the landowner you have, and how difficult that farm is. Not all farms are created equal. Not all farms are taken care of at the same level. For other farm managers, 15 to 20,000 acres is quite doable. There are a number of things that go into that equations, but if I'm a farm manager looking for a farmer, I want somebody who's going to make my life easier. Mm-hmm. And by that, I mean is they're going to communicate with me. They're going to let me know what's going on. I don't want to have to ask them for the reports. I don't want to have to call them 5 times to get the reports that they should have just sent, the farmers that they should have just sent in the first place. And I do believe that used correctly, this type of tool can help increase the supply of potential farmers. And then the landowner can pick and choose, well, what's important to me? For some landowners, it's taking care of the old farmstead site, making sure the grass is mowed, the flowers are taken care of. Other landowners is, I want the max return. Mm-hmm. One of the things that surprised me about the landowner conference at East Peoria was I didn't expect landowners to be as interested in stewardship of the land as what they were. And what I mean by that, by cover crops, tillage methods and stuff. And those were highly attended. And I had a number of those in the breakout sessions, thinking that some landowners would be interested, some weren't. And we didn't have enough space in those rooms for those topics. And it was a bit of surprise at the intensity of it, because they're seeing what's going on. They're hearing about land stewardship, and they're wanting to protect that investment.
Oh, absolutely. I mean, it's you need to maintain or improve the quality of that soil, or it's just going to, deteriorate the value over time. And that's very important to any landowner. And we express that to them. And, we suggest, upon doing this, you get your soil tested, and, within the lease contract, it's the current tenant or the winning tenant farmer must maintain or improve the soil quality and provide evidence on an annual basis. And, we encourage that from every landowner to say, hey, get your soil tested, know what you're working with, know your baseline. But every landowner that we deal with is of that same mindset of, I want to make sure my ground is taken care of.
And I mean, I would say for our business, we are just one or a couple, I guess, of the many factors that I would believe would take place in a thoroughly managed farm. Okay, so we make the connection, we bring transparency so everybody can see it. To me, like, what a great opportunity for the farm manager to be able to now, like, hey, instead of me just telling you guys, hey, this is your farmer, it's his name, I know the guy, he's going to do a good job. Well, now, like, let me go sit with the family as a farm manager and say, hey, here's the list of bidders. Do you guys see anybody on here that is glaring that you wouldn't like on your property? Okay, like number 5. Okay, great. He's off the list. Now, me as your farm manager, I'm going to help you walk through this. And here's why. The high bidder, I'm not comfortable with him. There's been issues with him in the past, so on and so forth. So he's gone. But now between the second and third high place bidder, both of these are very good operators. I think they could both be a good fit. Here's maybe the benefit you're going to get out of one of them. Here's the benefit you want. And so kind of make a decision with the family or the individual who's, being represented by that farm manager. Maybe a lot of folks, maybe they'll just say, hey, listen, I'm paying you to take care of this. I don't really have any interest. But I think the growing trend is just like you're saying, that landowners still don't have all of the insight or knowledge that it takes to actually truly take care of their properties the way that they should be. But I do believe that they have desire to, like, grow their understanding of it. And why are you making these decisions on my I've got $4 million of farm ground sitting here. Kevin, why am I allowing you to just say, Brad, here's what we're going to go ahead and do with this? Okay, great, Kevin. But, like, would you tell me why? Why did you pick that guy? Because there's another one who says he can pay more. Is he a bad farmer? Does he not take care of his properties? Does, just some stuff like that. And so I think being able to open this marketplace up to everyone and then have the farm manager really, really be able to put his teeth into this with the family and say, hey, I'm still here to represent you and make sure we get the best operator in there possible. I'm the expert in this space. But I still would like your feedback. And I want to make sure you guys understand what we're doing here with the farm and, the sustainability going forward and stuff. This is going to be beneficial for everyone. We're not taking the high bidder. That guy's a clown. He's not going to probably even pay. I'm going to go have to knock on his door every March, every November to get the check. And that's not how I want to operate. But we've got 2 or 3 other guys here very strong. And we happen to be, 25, 30% higher on rent than what we had seen previously. These guys are aggressive. We know that they're in good standing with the bank. I think this is good, sort of a deal. So still let the farm managers ultimately do their job, but show more transparency to the landowners. I think going forward is going to be very beneficial and valuable.
Yeah, I can agree with that. Information is just so important. There's an intimidation factor with landowners that they don't know what to do with it. But again, that was part of what we were trying to do with the landowner conference, was to say, hey, these are the things which you look at, and at least now you know what kind of questions to ask, as opposed to only relying on the farmer. And there are farmers out there that are good communicators and they're honest, and there are some out there that will pay a competitive rate without even being asked in raising those. But sure, the flip side of it is that even if you have somebody that's honest, it's like when you go out and bid, if you want to go out and buy a car at the local car dealership, you have the dealer who wants the most, you have the buyer who wants to buy it as cheap as what they can. And the meeting point is somewhere in the middle. Does that mean that the dealership is dishonest? No, it doesn't mean that they're being dishonest necessarily. And if the days of long past, now you can actually go online and see what those new car prices or used car prices should about be. And this would appear to be that same sort of.
Well, and that's why we rebranded into CommonGround, because both the landowner and the tenant farmer have to find common ground. The farmer has to operate and make a profit to be sustainable, but the landowner needs to understand, that is part of the equation. I mean, we're a dual-sided marketplace as a price discovery tool, and we try and bring as much value to the farming community as we do to the landowner, because without one side or the other, it's just not going to work. And finding common ground is what we're all about. And I think we're all in alignment with everything being discussed. And I'm going to ask Kevin to maybe pull out his crystal ball with his years of expertise and maybe give us his thoughts on where things are going. And that can encompass, I mean, obviously we saw the Federal Reserve kind of indicate, yesterday that, hey, there might be 3 rate cuts in 24. So it looks like we're going to get a little bit of, breathing room on the rate side of things. And, what are you kind of seeing and looking at as far as land values, how that correlates to rental values? And then also, I know you're big into succession planning and very astute at that. I wanted, after you kind of do your crystal ball work, I know we want to touch on succession planning and,
Sure.
what that looks like as far as people inheriting ground and how operations, should be setting stuff up. So I'm going to go over to you.
Okay. Well, I'll look back before I'll look forward. And I really like to stay away from politics. So anything I'm about to say is not making a political statement. I'm just analyzing what we have seen. And we saw in the current farm bill, which we're about to have a new one out. But in the current situation that we have now, we'd always heard that the government, USDA, was getting out of direct subsidies. And by and large, they pretty much did. But under the Trump administration, and a lot of it was timing. I'm not making a political statement, but under the Trump administration, we saw COVID payments. We saw trade war payments. We saw a federal government that was willing to put money forth into farming at a pretty high and significant rate.
Mm-hmm.
And I try to balance that with where we were going. And again, I'm not saying that the Trump administration had a more socialist policy, but I'm just saying is a more social policy. But we saw that massive amount of money, PPP loans, for instance, and we saw a complete monetization of debt, or a significant monetization of debt, because of the close down of the economy. And now we're kind of suffering somewhat from, in part, inflation from that. So it's hard to look forward. We can look back, and I thought, farmers are being so far pretty well protected. Crop insurance, federal crop insurance, is not cheap. It's heavily subsidized, but it takes a lot of the huge risk out of farming.
Mm-hmm.
In other words, you're pretty much guaranteed cover your input costs. Whether you're guaranteed being able to capture everything you need to live on, that's not necessarily baked into it. But it's an industry where a huge amount of risk has been not completely, but significantly reduced. What precipitated some of that? This is some of Kevin speaking, but we had 2 presidential elections that were decided by the Electoral College, and it got down to farm states such as Iowa, Missouri, Wisconsin. Those electoral votes became hugely important, and what happens on the farm is deemed by that, and we're still seeing large amounts of subsidies. I cannot predict what's going to happen in the future with farming in terms of the amount of subsidies, but we do know that it's been pretty significant, and it's what's helping to keep things quite profitable. I mean, it used to be in small towns that you had the doctors and attorneys at one level and everybody else was down there, and farming was considered to be about maybe 3/4 of a regular job. But now, we see farm producers and landowners accumulating wealth.
Mm-hmm.
And they're overall doing well, not quite all. The average age of farmers is 62 years of age in Illinois and pretty much around the Midwest. And that keeps going up. It used to be you went out on your, if you had a Caterpillar Challenger tractor, you'd go out on there, and those were powerful tractors, but they'd about beat you to death. And if you continued into your 60s and then 70s driving a Challenger, you were going to pay for it physically. And now we're seeing anybody that's been in a combine or a tractor recently knows they're pretty comfortable. And they're pretty easy to drive once you figure out the technology. I do some video series online to let landowners know what's going on the farm. And this 70-year-old farmer is going through the different layers, and it'll do this and it'll do that. And he was really being quite impressive. It was getting down to, you could see the seeds dropping on a diagram. You could see the engine temperature. You could see the compression in the engine, how efficient the tractor was operating. And he goes to the next level and he goes, well, I don't know what this is. It's just too much. But he was really getting down to the nitty gritty. And here he was at 70 years of age and having a grand old time out there. And the tractor was not beating him up. So, but you're looking at that farmer that's 62. Landowners, I'm going to guess, are, as a general rule, older than that a lot of times. Mm-hmm. And when you're looking at about 10 years from now, a lot of those 70 and 80-year-olds, I guess, to be direct, in the early 2030s, there's going to be a lot of changing of the guards on farm operations and also on land ownership. And my crystal ball tells me that there's going to be a lot of land come up for sale once we get past the 2020s. And then you're going to start to see a more significant shift. Is it's really hard for farm families who are no longer farming, or even if there's somebody in the family farming and you get several generations down the road. And I'll back up a little bit. I've been a farm trust officer, and I had 2 farms come up maturing in the trust. In other words, they were going to be sold. And there were 24 beneficiaries on each farm. It was like herding cats, and everybody had different ideas of when it should be sold and how much it should be sold for and how we're going to sell it. And it just becomes almost impossible when you have multiple generations owning a farm. But that's going to come to a head in about 10 years. I believe that I don't know what that's going to look like, but that's going to come to a head. And I think that's going to drive a lot of what the future is going to look like. And I think you're going to see more land come up for sale once we get past that, unless in 2025 the federal government doesn't extend the basically the death tax or the estate tax exemption and roll it back to about 5 to 7 million. Then families might be looking at having to sell some ground to pay the taxes again. Sure. That's one of the things that a lot of people don't want to recognize everybody's will protect the family farm from having to pay taxes, death taxes. And that's a great idea. But what that's also done is it's kept some farms off the marketplace. In other words, not as much ground comes up for sale because they're able to keep it in the family more readily. And that's just another factor. Is that going to change? I don't have a crystal ball on that. I know with what's going on in Congress right now, I would not bet the farm, meaning I wouldn't sit back and just assume that they're going to extend that exemption and maybe even increase it. They may very well do it. But what's going on in Washington, D.C. right now, there's a lot of difficulty in that. And on the liberal side, again, you look at, they're thinking the mentality would be is let's have more land come up for sale so more people can get involved, people who are not currently involved. On the conservative side, you're generally looking at let's protect the farm family and allow them to continue. And I think coming together in Congress is going to be a lot more difficult. But I also look back as I wanted to farm. It didn't work out. My dad really didn't want me to be into farming because he worked really hard at it. never felt like he was quite successful or made much money at it. And he got out of business about the time I was old enough to come up, and I wasn't to start getting more actively involved. I was doing a lot of the farming as a teenager, the way that it was. But you look at the average farmer back then was probably, I don't know the exact numbers, around 400 acres.
Mm-hmm.
And now you're looking at 1,500 to 2,000 acres. And if you go into the future that much, and with technological improvements, farmers can operate much larger. Two farmers applied for the same farm. One of them was a farm family with 5 people trying to generate income and live off of 6,000 acres. The other one was one guy, his dad helped him part-time, and they had a part-time hired person. Which one do you think was able to bid a higher cash rent? It's the person with the lower, with the one guy. And so as technology changes, we're able to farm more and more ground. What's throwing a monkey wrench in that, and I don't know how this is going to play out over time, is that it's hard now to find people to take over the farm, even with the amount of money that's going on. It's really hard to find labor to hire somebody for under $80,000 a year to help you on the farm. And so is the labor shortage going to potentially slow down the drumbeat towards bigger and bigger farms? It'll probably have some impact. But I also remember a farmer that I knew. He was up over north of Bloomington. He was 82 years old. His 78-year-old brother-in-law helped him farm, and they farmed about 2,000 acres. And they'd literally shell off a load. I'll back up a little bit. The brother-in-law passed away. Farmer had to do it himself at 82 years of age, and he'd shell off a load, put it load it into the truck, take it to the elevator, he'd come back, and that's how he did his operation on 2,000 acres, and he still did it up until the point he passed away.
Well, and I had a podcast guest on he's got moving iron, and he's big into used equipment sales. So we spent an hour talking about equipment and the impact on farming, and it was his view that we are not far off from fully autonomous, where these farmers are not even going to have to get in their planters or get in their combines. I mean, he said it's basically, if you have the newer equipment, it's basically oversight at this point. You're in the cab to oversee. And he said basically his viewpoint was you're going to see the technology picking winners and losers, because it's the bigger growers that can afford the newer technology. And, he was saying it's going to be a big reset out there as far as, the labor shortage and how technology, I mean, we all know technology is going to impact everything, but he said we're not but a couple of years off from fully autonomous, where you probably don't even have to get in there. So,
well, I personally don't do this, but I could go to an AI artificial intelligence website and say, hey, I need an article on cash rents in Illinois. And it would kick out an article for me.
Maybe I'll try that next time somebody asks me to write an article.
But a couple other things, though. I do think you're going to see more emphasis on stewardship. Unless the government mandates it, though, I don't know really get serious about mandating it. I don't know how serious they're going to be. I think there's going to have to be more incentives to get farmers to do it. If you want cover crops, they got to have more than 10 or 15 bucks to do that.
What are your thoughts on cover crops, Kevin? Just like, I don't want to sidetrack there, but to me, like in some of these regions, and I'm not a hands-on farmer. I've been around it by extended family. I've been around a lot of it for the majority of my life. But to me, like the opportunities now to be able to get 2 crops off of the same farm, like what are the negatives to that? Like I'd love a wheat crop, and then I go run my beans in behind it.
Well, the negative, cover crops can take different forms, such as double crop soybeans. You could do that. You could go back and plant wheat, but just putting out something that's going to hold the soil in place or improve soil tilth, I think you're going to see it grow. But from a farmer perspective, it takes more time. It takes time to manage. And what I always tell landowners is that if you want a farmer that you want to do cover crops, then hire somebody who does cover crops or is at least really interested in making it go. If you ask your current farmer just like, well, I don't think it's going to work, you're going to have to pay me for it. If you want it done, it causes a lot of problems. I can guarantee you a cover crop isn't going to work.
Yeah.
I know some farm management companies charge a higher base rent on flex leases for people who do cover crops, because the idea is that it can hold down in the short term yields. I'm not saying it has to, but it does. But again, it gets back to, do you hire, if you want cover crops, do you have a farmer that's really into it and can make it work?
Yeah.
And I think that's a part of the key. And I do hear a lot from farmers to say, well, the landowner needs to offer incentives. My take on it is that if the landowner really wants it, maybe rather than offering incentives in terms of you help pay for the cover crops, that should be reflected in the cash rental rate. And I also think that's the beauty of a flex lease is that allows for flexibility, especially if you have a decently strong base rent, and if things get better, then you can capture that part of that as a landowner. But the cover crops, it does add an expense. And if you're a landowner and you want cover crops and you've got Drummer Flanagan soil, highly productive soil, and you have a drainage problem out there, that farmer is going to really struggle. I don't care whether they're good or not. It's going to be a struggle for them to go out there and kill off that cover crop before it gets competitive with the cash crop.
With the grain.
And so it's a mixed bag, and it's the same way with organic. I see organic growing. And if you have a farmer that doesn't think it's going to work and doesn't want to do it, it's probably not going to work. The most profitable farms I've ever managed, to be frank about it, are organic. They are a lot of work, but they can be more profitable. But again, it still gets down to where I like, the system that you're talking about is it does give more information into the hands of landowners to make better decisions, but it also puts information into the hands of the farmer if they're wanting to expand their operation, or at least they have an idea of where they should be, at least close to being on a competitive situation with cash rent. The other thing I want to say is that a lot of landowners are under the belief that the higher, I won't say the highest, I'm just saying higher cash rent farmers are out there basically cheating on the fertility and drawing down the fertility. And yeah, that happens, but I generally don't see it. And to be frank about it, where I tend to see that more often is on farmers who have been operating without somebody really paying attention on the farm.
Yep.
Well, and Brad has always said, he said, the person paying the highest in rent is probably going to take care of the soil the best because they need to get the best yield.
Yeah, on the fertility, one of the, but again, I'm speaking in generalizations. If somebody's running a lot of ground, cover crops can slow them down.
Yep.
And the other aspect of that is that if I'm operating 50 to 100 miles away from my base, and I'm farming 20,000 acres, and I move into an area with my equipment and it rains, I'm probably not going to spend a lot of time there waiting. So I'm either going to move on, or I'm going to go as soon as I possibly can, which may not be ideal.
Yeah.
So that's just another consideration. But again, the beauty is that the more information the landowner has, the better of a decision they can make for them.
Absolutely. Well, we have certainly covered a lot of ground here today, no pun intended, but we are kind of up against our hour here. And
Sure.
I know Brad had a lot of questions. I've still got several on my list that we're not going to get to, but I've thoroughly enjoyed the conversation and just a wealth of knowledge. So we'd love to have you back on and just keep checking off these boxes. So I greatly appreciate your time today, Brad.
Yeah, Kevin, thank you. I've got so much stuff I'd like to talk to you, and I think would be valuable information for the folks who watch this and listen. 100% related to the succession planning going forward, and the different options that you see in that for people, or offer people different reasoning why maybe one family wants to sell, another one maybe say, hey, we want to keep the ground. If ROI is a contributor to that, I've got hours of stuff to talk to you about.
Sure, probably several hours, but it's a topic that really needs to be discussed and have the time to do it.
I think it's super important, and it's not out there enough for people to understand, what the options really are. And to me, not everybody, maybe not every single one wants to just go sell and get the big check and pay the taxes on it. Like, I think what we can offer, how about an increase in your ROI of 40%? You keep the farm, you and your brother or sister, you guys get a nice check every year. Historically, we can look at the chart. That ground's going to keep getting to be more valuable. You're making a nice living on it. Let's leave it at that.
As a teacher, as a teaser for a future discussion, if you're a farm family, and you have $5-6 million worth of assets and farmland and machinery, et cetera, and you have 3 or 4 kids, there's a pretty good chance that if you're fully not thinking through your estate plan, after you're gone, and you won't see it, but you're really increasing the odds that some of your kids will never talk to each other again.
Almost guaranteed.
We see it firsthand. we definitely know some stories. So, but I think that should be the topic for the next podcast. And like I said, we'd love to have you back. Greatly appreciate you joining us today. And for everyone out there listening, as always, thank you. Greatly appreciate everything. And don't forget to like, share, and join the Common Ground community. So thanks to all, and we'll see you next time.
All right, bye. It's been fun.
Thank you, guys.
Take care.
All right.
Kevin.